Okay, well, hello everybody to our latest webinar. Thanks for turning up. I'm Michael Gable from Fairmont Equities. Once again, it's a half-hour webinar. I'm just going to go through just a few key aspects on the market, what I'm liking at the moment, what we've been buying recently, and then we'll just open it up, of course, to the Q&A. So this is where you need to use the Q&A box. You can just basically type in the stock code, what you want me to look at, and we can pull up the charts and we'll go through that. Obviously, I won't end up going through everybody's, but we'll try our best to move quickly. If you have any other comments, you can add them into the Q&A box. If something's not working, audio or visual, so just dump it in the Q&A box, and that way I can sort that out for you. So what I'll do is give me a sec. I'll just move over to the slideshow and we'll get started. Okay, so of course, any advice, general only. And just very quickly, in terms of, what is it that we do? I mean, obviously, a lot of you are getting our free newsletter every Thursday, but our main business is in portfolio management. So this is where if you have a portfolio greater than 500,000, whether it's in your own name, self-managed super fund, I'll personally help you with managing that. We just charge on brokerage. It's a proper HIN, proper bank account. If you're half thinking about it, get a free portfolio review. So if you fall into this category, just send me an email, leave your details in the Q&A box, and we can do a free review. But of course, there's a lot of people that don't take up the portfolio management service, but they buy the research. So make sure you're grabbing the Dynamic Investor Report to get our research. Okay, so we'll just go through the indices at this point. So S&P 500, as most of you know, I've been bullish on the US market. What I've got here is a daily chart showing what's happened since around February. The two blue lines that we see are the moving averages. So we've got the 50-day and the 200 days. So basically, as you could see, and I would have made this point during our last seminar in September, last webinar, as long as the market was above that blue line, I was happy to stay long. So I mean, for my clients who are holding a NASDAQ ETF, and the NASDAQ trades pretty similarly to the S&P 500. As you can see on the far right-hand side, it did break under the 50 days. So I have closed off my NASDAQ ETF. We took profits in that. But, as these things sometimes happen, within a couple of weeks, it was back above that 50 days. So look, it does look like the US market can head higher. I mean, market breadth has improved in the US. So I do expect it to head higher. I'll be, possibly looking for an opportunity to maybe re-establish an exposure there. The line, as I mentioned, the 200-day moving average. So that's basically, if you're, I guess, sort of very long term, you'd wait until the market breaks under the 200-day, because you don't really want to be in a market that's under the 200-day moving average. So if it was to break under the 50 again in the short run, I'd be expecting it to pull back to the 200-day. But look, so far, so good. In terms of our market, so this blue line is the 200 days. So in terms of the past several weeks, we have really underperformed the US market. We've already given up quite a bit. So, we've gone back to that 200-day moving average, and sort of we were holding in around that level. So while the US was breaking under the 50-day, I wasn't getting too concerned about our market, because we're already at the 200. And as you can see, we've sort of bounced above it. We're not really doing too much from here. I think that, our market has upside, but it seems like it might be a bit of a hard slog at the index level. And I think that's because of the banks and sectors like that, which do seem to be struggling at the moment. I think there's uncertainty around what's happening with interest rates locally. I mean, most, like our major exposures are in resources. So I think that sector will do better than most other sectors on the market. So talking about resources, I think this is where the opportunity lies, and you know, I've thought this for a while. So gold, everybody, or a lot of people have an interest in what gold might be doing. So again, just looking back the past several months, so the last webinar in September, we looked at gold breaking out of, you know, was a consolidation period for a few months, that horizontal blue line. Went on a bit of a run, got to a point where it was getting a bit vertical, and then we had a down day there. So, I mean, in terms of the way I was managing it, I like to use the trailing stop. So, so with our gold exposure, we did get out in October, but to be honest, a few weeks later, the way it was trading, we've decided to get back in. So I've done that with a gold ETF, a gold miners ETF actually. So it has the code GDX, and basically, because it holds a bunch of gold miners, usually when gold goes up, the miners go up by a higher amount. Works both ways, of course, but that's what we're holding at the moment. So look, we're back into that. You know, it is moving higher, as we could see on this daily chart. The curve line is a 50-day moving average. It's holding well on that. I think at worst, gold maybe goes sideways here for another month. You know, maybe the 50-day moving average sort of levels out. Gold sort of moves sideways and runs into that line a bit more, similar to what we saw in the middle of this year. And then it might be ready to head higher. But, you know, it could break to a new high in the next few days. We don't know, but the overall picture for me, you know, for gold, I think it's still looking really good. This is an interesting chart. So look, when we're getting back into GDX, I mean, I had one client actually, I think a couple of them mentioned those interesting photos of everybody lining up at Martin Place at the gold bullion exchange or whatever they're called, buying bullion, saying, "Oh, surely when you see these pictures, it's, you know, it's a sign of the top." I think that's a very crude way of looking at it. If you actually have a look at, because GDX is an ETF, new securities can be created when the demand is there. So even though the price of the securities can go up, the ETF securities can go up, doesn't mean that the shares on issue is going up necessarily. And what this chart is saying or showing is the number of shares outstanding has gone down, and you don't see that when people are piling in. So what I mean by that is the grey line is gold going up. The sort of bluish line is showing that over the past few years, the number of shares outstanding has dropped. So what that's saying is there's more sellers of the ETF. So the market makers are basically buying it back off them, and those shares aren't in the market anymore. So essentially, we're not seeing big investing in gold miners yet. Still a lot of skepticism out there. If you were to have a look at what this chart looked like a number of years ago, the last time gold peaked, it was the opposite. So as gold was already peaking and falling, the number of shares being issued was still increasing, because, you know, you've got everybody piling in at the top. So we've got nothing like that at the moment. I think most investors are still quite underinvested in gold. Silver. So this is a daily chart of silver. I've been obviously quite positive on this one. Again, like gold, we had our ETF, we got out of it, but you know, before long we decided to just get back in. It's had a massive run in the past few days. I mean, $50 to almost 60. So you know, a lot of people are wondering, well, with something like that, with a move like that, is it time to take profits? So I think, yeah, I think what would be interesting is if, well, I'm going to create a little poll, so bear with me. Let's see if this works. But I'd be curious to see how many people would be holding and how many people would be selling. So look, if it doesn't work, you know, we can just see what your answers are in the Q&A box. So let's see if so we'll see if a little box comes up. Alrighty, so you might be seeing the poll. I'm going to move on to another topic and we'll come back to it. Energy. So look, I've spoken about uranium before, and I'm still very positive on that. But I'll touch on oil and gas specifically. So I think there's an opportunity here. So oil and gas, I think it's one of the most unloved sectors in the market. So if you're looking for a contrarian opportunity, they don't get better than this. So if we have a look at the energy sector in the S&P 500 going back, what is this, 45, 50 years, we could see that, you know, apart from COVID, it's pretty much at a record low. So no one wants to invest in oil and gas. It's, you know, a relic of the past, and it's all about AI and all these other, you know, this is what the new economy is all about. And just no one's invested in oil and gas. So, yeah, I think, you know, the consensus view is that it's on the way out, and it's all about wind farms and solar farms and all that sort of thing. So no one's invested in energy. So definitely not a crowded trade by any means. If we have a look at oil production in the US, so obviously there's OPEC, but production in the US, shale production has already peaked. So it's already starting to roll over. So you've got a situation where the US has run down their oil reserves. Whatever they could produce locally has already peaked. So there are supply issues. I don't think necessarily OPEC can just turn the taps on and flood the market. Obviously, they don't want to do that. So, yeah, production in the US has peaked. No one's been investing in oil and gas. So you've just had, you know, oil and gas companies in the US have just been buying back their own shares. I mean, there's just nobody's interested in investing in oil and gas. So classic commodities situation where no one's investing, there's a supply problem, and you can't just turn supply on quite easily. So that's the situation we're in at the moment. And as we've all been seeing in the news, at least, the whole sort of renewable energy thing isn't moving as quickly and smoothly as we hope. So we're going to have to come back and lean on gas, lean on oil. So I think there's a big opportunity in this sector. Could surprise. Alrighty, so let's come back to our silver. So let me just see what we've got from our poll. Let's see. Alrighty, so 80, I'll end it now. 81% say hold, 19% say sell. So I'm on the hold camp. So I may well be wrong, but so a few things I'm looking at. So yes, it's run hard, but firstly, if I have a look at this daily chart, this pattern here since October is just a classic cup and handle formation. So usually what happens is when a stock breaks out, the first target, what you do is you look at the depth of the handle. So if we look at that arrow pointing down, that's the depth of the cup and handle. add that back on top of where the breakout is, so that's the next arrow, and it brings us up to, let's say, $63. So yeah, if silver's at about 58, potentially you could try to sell it at that target. Should we do that? Well, I mean, it's such a strong market, it could well overshoot that target. So the other thing to do, the way I run it, so now that it's running, I'd like to use a moving average as a trailing stop. So if we have a look at this chart again, the blue line in this instance is just it's a 10-day moving average. I've previously used 20-day moving averages as something starts to really get vertical, but I think maybe with silver, you know, the 10-day might start to be a better one. We could see that sort of on the left-hand side when silver really got moving in September, the 10-day was great. So it stuck above that and it kept you in the trade all the way up until October. So, I mean, even when I used the 20-day, the way I traded this for clients, I think we picked up the silver ETF. I think it was late July, early August. And when we sold it in October, I mean, it was still a 30% return. You put 100 grand in the silver ETF. If you're still pulling out 30 grand after a couple of months, you know, and I expect to do that, you know, something similar again. So, yeah, at the moment, since we got back into silver in November, I think silver, you know, and I've been using the ETF, so I'll just clarify, ETPMAG. Send me a message if you didn't quite catch that. ETPMAG, that's a silver ETF. Obviously, there's silver stocks, but it just moves with silver. So we got back in November. I'd still be happy to buy on a dip. You know, I think the market's down 5% in that time, and this is up maybe 12, 13, but I'm expecting a bigger move, and I'd use the trailing stop. So I'd hold it as long as it's above the trailing stop. But to put in perspective, this is a long-term chart of silver. So if we have a look at, say, a 50-year chart of silver, this is adjusted to a log scale. We could see that far right-hand side, it's only now breaking out of massive cup and handle. So with silver almost $60, it could be multiples of that. It could be at least a few $100. If you're looking at this pattern, it won't, you know, it'll take a few years. But look, if it pans out that way, I think that, you know, potentially we could be in and out of silver, 3 times a year, 4 times a year. If you're looking at these sort of 3 monthly, rally consolidation, you could say, well, why don't I just hold it until it gets to that level? Well, you just don't know when it's going to reverse. So at some point, you'll get out with your trailing stop and you'll find that you just never get back in because it has continued to plummet. But I think, silver's a really, really attractive proposition at the moment. So I'd be looking at that. In terms of other things we've been buying, so yes, we've got our gold and silver exposure. So these are snippets from the Dynamic Investor report. So even if you're getting this report, you would have seen these recommendations. So South 32, that's something we bought in recently. So again, I think base metals should do well. It's run a bit in the last few days, so I'd be buying South 32 on a dip. Linus, so that was another one of those, went up vertically. We got out on the trailing stop, got back in a few weeks ago around these levels. Hasn't really moved much, so I think even at current levels, Linus is a buying opportunity. In terms of the oil and gas opportunity, what we've picked up is there's an ETF on the left-hand side here, fuel. So this is basically an ETF of oil and gas companies, overseas oil and gas companies. So we could see it's tightening up under a major resistance line. So it just looks like it's really close to breaking out. Yeah, maybe it needs a bit more time, but I've been happy to enter this one. And Rio, actually, we had this in the report. I think it was last week or the week before. To be honest, we're picking up Rio today, so I waited for today's breakout. It's now trading at an all-time high, which is very bullish. You don't have resistance lines above you. So again, sort of like South 32, I think if there's a dip in Rio, that's something that that I think should be considered. So we'll move on to the Q&A. Again, just quickly before we get onto that, if you're interested in the portfolio management service, so for those with the 500K plus portfolios, yeah, give me a call, email me, michael@fairmontequities.com, leave your details in the Q&A box. We'll do a review. But again, if that's not for you, the Dynamic Investor Report's got a lot of great ideas. So for the Q&A, just type it in. There's already a few sort of stacked up already. I'll try to get through those over the next 15 minutes. And any other feedback for next time's the next webinar, just let me know. All right, so we'll move out of that. So we'll chuck that away. I've now got a chart here in front of you. If anyone can't see that, let me know. And we'll get stuck straight into it. So first request is on Stanmore Coal. So I actually do like coal. I'm holding, got some new hope for clients. It actually hasn't formed as well as Stanmore recently. But yeah, so look, if we have a look at, it's fallen back here. Actually, I had this in the Dynamic Investor recently. So what I liked was the pullback, the rally back up, a little congestion, and now it's breaking higher. So I do think Stanmore Coal looks very good here. We've got another one with a few tech stocks, WiseTech, PME, and Xero. We'll look at the WiseTech chart. I don't think it looks too bad, to be honest. I think they're all under pressure at the moment. If it was this time last year, I'd be piling in at these sorts of prices, but the market just really isn't taking to these stocks yet. So if the market tide's not there, you might be sitting in these for a while. But look, I think WiseTech, of those three, WiseTech, PME, Xero, I think the chart looks like it'll improve. I'm just not sure for how long, to be honest. Question on uranium, yes, that's just one of the best setups. It just needs to get going. The long-term price is heading higher. Shorter term, I think the stock's bottomed. So have a look at that. We're holding URNM as the Uranium Miners ETF. Question on Newmont. So, I mean, that just pretty much looks like the gold price consolidating. I think that's ready to head higher, to be honest with you. Question on Bannerman, that's a uranium stock. So I don't know what that line's doing there. So I've noticed that, this move here is equal to this move. Pulled back just under the 61.8%. Fib done the same, bounced. Yeah, that's a buy. Okay, question on HMC Capital. I don't know what the code is for that off the top of my head. I'm sorry about that, but send me an email and I'll do it in next Thursday's stock request for you. EOS, so obviously massive run. If you're looking at the higher lows and the higher highs, you could argue that when it broke this area, that was the previous low. That was, if you're still in it here, that's where you would have had a trailing stop, I think, if you weren't using a moving average. So it is on the way down. I mean, it's rounding out here potentially, but I'd be very cautious on that one. XRF Scientific, and that doesn't look not a good day today. Again, you've got a situation where if we're just purely looking at higher highs and higher lows, It's already broken that low. It's come up to retest that line, and now it's failing. So I think there's more risk of this one falling. CVL. All right, so I see a range here. Not ideal that it tried to break out and failed. Usually when you see a failed breakout on the upside, it tends to then break to the downside, and it's hanging around the lower end of this range instead of the upper end. So this looks at risk of breaking that. Not breaking it yet, but if I had to bet, I'd say to break under that. Another question on interest rates. Will they go up or down? I think they won't go anywhere for a while. There's obviously some sort of competing data. Spending today was high. Inflation is high. GDP was lower than expected yesterday. So, yeah, not a great economy we have at the moment. Okay, next one, EDV. So if we start off with the weekly chart, again, I just still see I've been asked about this a few times. I still just see a downtrend, unfortunately. So if we move back to the daily, it's recovering, but it's quite labored. Yeah, I'm not a fan of that. Question on the lithium price. Lithium's hard. It's a hard one at the moment. I mean, I'm as bullish as I am resources. I think lithium's a little bit more opaque with what's happening there with supply. But having said that, we've traded in and out of PLS and mineral resources in the past 6 months. You know, done well out of it, but yeah, I keep those on a tight leash. BHP, I think, is looking good. It's hit basically this high here. So yeah, look, it's one I hold for clients. We had a new client start, and he was ready to buy stuff today, but I didn't buy him BHP. I just look, it's at that high. You want to see it sort of come back into the range. I wouldn't be chasing it after it's done that. You know, that's the weekly chart. So it does sort of look messy on this one, but I do think that ultimately it'll find resistance after it gets through this resistance. The next level's at 46. Zip, so uptrend, now broken, heading lower, unfortunately. Elders, yeah, really messy. This is one that we sort of got in and then got out, and I think we got in here and got out and didn't, you know, I had to take a small amount of pain on that one, just a small loss, just to move on to something heading the right way. Obviously very, very volatile at the moment. Chart wise, it's not great that it sort of turned just before that peak. So look, I think I'm sort of neutral on that one at best. Question on copper. Yeah, it's basically just had a bit of a breakout recently, hasn't it? So we're holding an ETF called Wire, which is copper miners ETF. Yeah, the question is, buy it on a pullback or a dip. Yeah, if you get a pullback or a dip, I'd be a buyer, but yeah, with it breaking out, it might not dip for a few sessions. Do I like USL as a silver play? Yes, I do have a couple of my clients of mine that like to trade a bit more aggressively. We're holding USL. They're doing the capital raising at 55. I think at the moment it's around 65. So if you've got it, I'd be just waiting for a few days out until the share purchase plan is due, and as long as it's well above 55 cents, I think you have a crack. Have a look at TER. Yes, I did look at that one in this morning's video, your stock request. It's on the website, and I did look at this one in the Dynamic Investor a couple of weeks ago. So yes, it's broken out. I think there'll be a bit of resistance near 14 cents, but I think you'll get a pretty decent recovery on that one. Okay, we'll just go for another 5 minutes, so I'm not running too much over time. AIA, I'll start off with my weekly chart, and I just see something range bound here, so I can't really add much on that. I'm sorry. CSL, I covered it in the video this morning. I think it's entering a downtrend. Have a look on the website. RML, Resolution Minerals. I'm just flicking around here. I'll go back to the weekly chart. So obviously it's on the move. There's volume, very volatile. Yeah, look, it's pulling back quite a fair way. I mean, hopefully, if you're a holder, it holds in here, but I think you need to have a stop fairly close by. DBI, good trend. No, sorry, I was thinking of something else. DBI, so weekly chart, nice uptrend, big pullback, then sideways here. So perhaps the pullback is over. I'll just be looking at this sort of range here now. Sell it if it breaks there. Buy it if you get an upside break. Question on Woodside and RMS. Woodside, yes, I've even been buying it recently. RMS, yeah. Yeah, look, maybe a bit to sort of digest with what's happening here with the trend, but I think that's heading higher. Question on Sandfire. Yeah, look, it's breaking higher with copper. Happy to buy that. Question on Domino's. I think I'd stay away from that. Still got a downtrend. Now that it's at $21, not $14, I don't know if you really have much of a buffer. HMC looks like it's still sideways. Could we say there's a base there? It needs to get above $4 first. 360, we looked at that one in the video. I think it was last week. So we had the uptrend broke. I think this one's still under pressure, to be honest. Okay, just a couple more. DC8, Black Cat Syndicate. Haven't heard of that one. So I'm seeing a trend here. Obviously, it's pulled back sharply after this move, but holding on. I mean, there's probably could almost draw a line there. Yeah, looks like it's just going to maybe just suggest sideways for a while. After a big move like that, it usually needs to then use up some time. And okay, the final one is Goodman Group. Obviously under a bit of pressure today with the interest rate uncertainty. Look, if we have a look at the weekly chart, it's not great, to be honest. I mean, this is one that we've done well out of in the past, and I think we got out of it around here in a trailing stop. I think our latest foray into Goodman Group didn't really yield anything, just underperforming the market. So it looks like no need to be there. Maybe if it's sort of back to these kind of levels, starts to be interesting, but it's heading the wrong way in a market where there's other stocks heading the right way. Yeah, so that was it for today's webinar. Thanks for all those that attended and contributed with the poll and the Q&A. Of course, we have I do my video every Thursday morning, so if I didn't cover your stock, send me an email and I'll try to cover it next Thursday. If you're looking at our management service, drop me an email. Happy to have a chat with you in the next few days and review the portfolio and set you up for 2026. Otherwise, we've got the Dynamic Investor Report. So as you could see, a few of those good names that came up have been mentioned in that report recently. So I'll post the recording on the website in the next few days. And if anyone needs anything, just let me know. Thanks again.